So is Nvidia a good stock to invest in long term? What's going on, guys? It's Ricky with TechBud Solutions, and yesterday I shared my thoughts about wanting to make a video that not just talked about Nvidia on the technicals, but also highlighted some of the key factors about Nvidia on the fundamental side on why I think it's a stock I want to invest in during this downturn. Let me make this very clear, and this is before we even jump into it. Just because I invest or plan to invest in Nvidia does not mean that you need to. I've always been open about sharing my opinion without the need of your approval, nor do I want you to invest in something just because I'm doing it. I'm the opposite of a crypto bro. I'm not here to convince you that you should invest in Nvidia or that you should invest in any form of crypto, right? And I don't get offended if you have another opinion. I like sharing my opinion on why I think it's a good investment and why I'm deciding to invest in it. I would encourage you to listen to my video and feel free to share the pros and the cons about what you think about what it is that I say. Because if you do happen to highlight anything that I might not have been able to clearly point out or some form of uncertainty, then I hope that you can share that down in the comment section so then I can also better inform myself. Again, my job is never to convince you. My job is simply to inform you about why I think it's a good investment and why I'm deciding to invest in it. So let's just go ahead and jump right into it. The first thing that I want to talk about is the three main reasons on why I've already started investing in Nvidia. A lot of you guys know, especially if you're part of my LPP team, they get to watch me trade live every single day, and they openly hear me kind of like share my open thoughts every morning. If you want to ever check it out, I trade live every morning. It's the second link in the description down below. But that being said, I've talked about, during this bull run originally when Nvidia became very overbought, hit highs of 153, I wanted Nvidia to crash because I made it very clear. I want Nvidia to crash selfishly because it's one of those companies that I just didn't get to invest in during that bull run. Now that, again, I'm finally getting my wish, right? Due to this trade war, due to the series of bad news that has been impacting the market, the short-term pain, hopefully, has been causing Nvidia to retrace. And Nvidia has now dropped, and this is the thing that I love showing, is that Nvidia from all-time highs of 153 is currently at a level of 101. That is a 33% drop. So that is already in bear market territory, right? It did hit lows of around $88, $87 per share, and that's a 43% drop. Now, I always tried to inform myself on the worst case. And it was really hard for me to find anything that highlighted any form of uncertainty of bear case scenarios for Nvidia. And I don't know if that's a good thing, but I like sharing that with you. So if you do find something, feel free to share it, right? There was some bad news that was shared just a few days ago, and it was that the United States actually stepped in to block Nvidia from being able to sell some of its chips to China. And this was a $5.5 billion pretty much block that is going to impact Q1 of 2025 for Nvidia. Now, this is one thing that I do want to share is, when it comes down to investing, unlike trading, I love trading as a whole, and that's intraday, right? So day trading means that you buy and sell a stock within the same day. But the thing that we have to be aware of is when it comes down to trading, I close out my trades every day. So therefore, I don't get to benefit from any of the gap ups that happen overnight. And if you know anything about the market long term, there are a lot of gap ups, just like gap downs, but a lot of gap ups that when markets do begin to recover, I wouldn't be able to expose myself to that potential opportunity if I wasn't invested in these so-called stocks that I can view as a good investment, right? So that's one of the benefits of investing in a company long-term. It's not just trying to get in and get out within that given day, trying to time the market, but simply getting invested in companies that you see to be a good deal long-term that eventually will recover. There's a very simple question that I would always encourage a beginner to ask themselves right as they're about to invest in a company that's very different from trading. Can you tolerate the time that it will take for this stock to recover? So whatever dollar amount you're thinking about putting in, just think about it and ask yourself that question, because what if things get worse before they get better? There's some concerns that I want to highlight before we talk about the pros of Nvidia and investing in it right now. Nvidia is set to report earnings in mid to late May of 2025. So what happens because of this block that was announced just a few days ago, the $5.5 billion charge that the US restricts chip sales in China? What if more bad news like this happens? What if, again, this is directly going to impact Nvidia's business? Because now they're not going to be able to report an additional $5.5 billion of potential revenue that originally was expected. So that's why Nvidia reacted in such a negative way. So what if more of that bad news happens? And what if when they comes down to reporting earnings, now they have to lower their guidance for 2025, right? Because China is such a big market for Nvidia. But what if that does happen? We have to entertain it, right? What if that does? Well, then yes, you are correct. Nvidia can trade lower. Is it going to trade to 86? Is it going to trade to previous lows of 75? Or can it go all the way to previous lows of 50? You have to entertain it because that's definitely a possibility. So when it comes down to investing, I don't want to put money in just thinking that, okay, this is the bottom, and just not mentally prepare that things can get worse before they get better. But this is what eases my mind when it comes down to investing in Nvidia right now. First off, position size management. Just like when it comes down to day trading, I'm not going to go all in on a position that doesn't meet all of my criteria. When it comes down to investing, I don't have to time the market perfectly. I never will be. I never will, right? But if it's a good enough deal, just like we talked about it, if it's a good enough deal based off of previous highs of where I think that it can recover to current price levels, it's already down 33%. And some people might not know this. A stock being down 33% doesn't mean that it offers 33% of potential recovery. I don't know if you guys understand this, but now because it's cheaper, if it does end up actually recovering to previous all-time highs from the current price level, it offers a 51% potential upside. 51%. So to me, you are correct that if Nvidia does continue to sell off, if it does have a negative earning report, if more negative news does continue to get factored in, then yes, there is more potential downside. We have to entertain that. I'm not like a crypto bro. You shouldn't be one either that gets offended when any negative news is shared about a company, right? That just shows how uncertain you are about your investment. You have to be open-minded to the downside. So yes, there could be potential downside, but the potential ROI is so much greater in my opinion. Therefore, it offers 51% of potential upside if it does recover just to previous all-time highs. And we'll get into why I want to invest in Nvidia in just a little bit, but this is what kind of gives me peace of mind that you are correct. If I manage my position size, let's say that my intention is to invest $100,000 into Nvidia. Well, right now I can do it with a dollar amount that is maybe a little bit more easy for me to tolerate if things get worse before they get better. But I know one thing, because of how much ROI potential it does offer and how much of a good deal it already is, I want to be invested. So even if I just put in 25,000 or 25%, I want to use percent because every person is always going to invest with a different dollar amount. So 25%, I have some skin in the game and I have about 1/4 of it, but not so much that if things get worse, I become irrational or emotional. So I feel like, again, I have some skin in the game, but I'm well positioned to tolerate more downturn. And I love that, right? I welcome it because it would almost excite me. Yeah, I bought in at $100, but again, I'm not trying to time the market. So if things get worse before they get better, I might lose money technically, but I want it to sell off more because I want better deals, right? I want to buy in more at a cheaper price. And when looking at different bear cases, when it comes down to Nvidia, this is one that I found that, again, was still somewhat of a stretch, but nonetheless, all it really kept talking about was bull case, bull case, bull case. And it said that the base price was 165, which is definitely not where we're at right now. The bear price originally was 115. We're already below that. And then the next bear price is 65. So even at the worst bear case that I've been able to find, and again, I still even want to think that it can go down 50%. Because let's say things do get a lot worse for the US than expected. We have to take it into consideration. Not that Nvidia is doing bad as a company, but remember, if overall markets and economies are doing bad, then these companies will not thrive during those conditions. It's just common sense, right? But even if that does end up happening, I shouldn't be scared to be invested. I just should be mindful of the dollar amount that I put behind it. So by managing my position size, I put myself in a position that I'm more able to manage the downturn. So then when I plug this into my risk to reward ratio calculator, for those that are part of my LPP team, they should be very aware of what this is exactly. So what this does is I try to calculate bull case and bear case. What if this is the bottom of Nvidia, right? There's one thing that I shared just a few days ago or yesterday that says, just in, Nvidia CEO Jensen Huang arrives in Beijing, China to try to talk with Chinese officials. I love this CEO. Again, even when I wanted Nvidia to fall and it kept pushing and pushing and pushing, I wanted it to fall selfishly. This dude is a baller. He is a proactive CEO, and there's some people that don't like him because of their own personal bias, right? But nonetheless, when you think about an individual that runs one of the most valuable companies that's publicly traded at a $2.5 trillion market cap, I think one of the very important things to note is how eager is this individual for the company to succeed. And even with such a successful business, for him to go out of his way because of how he says China is a very important market to Nvidia, that he goes out of his way to try to figure out a deal because, again, this blockage that happened of the $5.5 billion. So he's trying to make it happen. And knowing that and taking that into consideration, right? I like the CEO. I like the company. We'll get into that in just a little bit. But when we plug it in for the bull case and bear case, let's say that he does lock in a deal with China, and then now the $5.5 billion original idea of what was a downturn is now erased and it's no longer negative news. Well, what's going to happen to Nvidia? Well, Nvidia will most likely begin to recover. All that it gave back because of that negative news is now most likely going to recover and then some, if he figures it out, right? So the bull case is that if this is the bottom, which again, I'm not saying that it is. I'm not here to convince you. I really hope that it's not the bottom. And I'm telling you that, right? Because I haven't purchased enough Nvidia. But with that being said, if this is the bottom, then the bull case would be that, okay, this is the bottom and that it does recover at least to previous all-time highs. We all know that, right? Nvidia is scratching this. It's the world leader and market leader when it comes down to these chips, when it comes down to AI. And AI is barely scratching the surface long term. At least that's what everyone likes to continue to share. Where we are now versus where we plan to be in the next years. The billions and billions of dollars that these billion and trillion dollar companies are investing into Nvidia. Nvidia owns a big market share of that. Now, we'll get into the pros and cons about that. But that being said, I think it would be pretty easy to say, I don't want to say safe to say, but pretty easy to say that, yeah, long term, Nvidia can at least recover to previous all-time highs. I think that it's safe to say that if markets continue to grow and expand, Nvidia can surpass that, right? Because again, if we're still scratching the surface in this marketplace and AI is still going to continue to grow, then Nvidia should continue to grow with it, right? But even if it does end up just going back to where it was, that is a 51% return. And I said that, okay, well, what if I cut losses at $70? In this case, again, I would treat it very different because this is only with a position size of 25% as of right now. But if it does drop to $70, I'd probably just buy more. So if anything, I can actually remove this very quickly because it doesn't take that into consideration. So let me go ahead and see if I can, this thing is glitching out already on me. But the idea behind this is that even with it dropping to $70 per share with an entry of 101, it still has a risk to reward ratio of 1.68, still showing that it still offers more potential profit than potential loss. And that's the part that really excites me about this. Even that if it does sell off all the way to $70 per share, I'm only in with 25%. Even then, if I can tolerate the time that it might take for it to sell off, when it does recover, obviously I plan to buy more. But even then, if I don't, my potential for profit at the current level is still greater than the potential loss. I'm not saying that $70 per share is the lowest price that it's going to hit. I'm just saying, again, I feel like I would be very well positioned on this really attractive company to buy at the current levels. And let me tell you, again, I want it to drop more. So when it comes down to the bear case, let's say that it goes down to $70 per share. It goes up to highs of 153. I cut losses at 50. That's a risk to reward of 4-1, which means that it offers 4% for every 1% of potential downside with $100,000 or 1,000 shares or $70,000 in this case. Again, here's my potential for profit. Here's my potential for loss. Here's my potential for profit. Here's my potential for loss. So the big thing that I want to point out is that how amazing it is to not be invested in Nvidia right now, because you didn't have to tolerate any of the downturn. And even if you did, right? I mean, to each their own. But this is more for people that are looking to get invested. For someone like myself looking to get invested in Nvidia. Why do I find Nvidia to be so attractive? There's three main things fundamentally that I like to look at when it comes down to investing in a company long term. One very simple question that I like to ask myself: is this an expanding market or is this a shrinking market? Very simple. So when asking about Nvidia, remember, Nvidia is a manufacturer for these chips, these very advanced chips, the most advanced chips in the world, right? Kind of sound like Donald Trump there a little bit, but that was odd. So is this a growing marketplace, expanding marketplace, or shrinking marketplace? I think it's very safe to say that AI and Nvidia, and the way that they're working together to complement one another, it's a growing marketplace. With the billions of dollars that these companies are pouring into AI and AI advancement, they need Nvidia chips, right? So with that being said, it's a growing market. The example that I can give you of what would be the opposite of the two would be kind of like Blockbuster. For those that, man, that's a great way for me to age myself. But Blockbuster was an in-store place, or let me actually just use GameStop. Is GameStop a growing marketplace or a shrinking marketplace? It's common sense, right? What's shrinking marketplace? Because the demand for a company of an in-store game store, what's the growth potential in that in-store? There's not much growth potential. It's common sense, right? But when it comes down to what we are doing with AI, many say that we're just scratching the surface. So if we can get invested in a company that is currently the market leader versus Nvidia and Intel, it's obviously the stock market's favorite, chip manufacturer, and it's also leading in this space that is just scratching the surface. So in my opinion, again, it's like the trifecta, right? I'm able to get in a company that's leading this marketplace, that's number one. I can get it at a discount, and it's just scratching the surface. So as growth continues to happen with AI and Nvidia, I can reap the benefit because of this downturn of getting invested now and making money as markets recover, but then also continue to grow. And that's the part that's so exciting about it. The second question that I like to ask myself is on the fundamental side. Is this a company that is growing fundamentally? Yes or no, right? Year over year. So when we look at how it's doing versus how it's done, very simple from even just the past few years. Capitalization, this is for its market cap, right? From 480 billion in 2023, 1.5 billion, 2.9, and then projection, right? Obviously of 2026 and 2027 of where it expects to be at 2.5. So this is obviously most up to date. And then PE ratio, it was at 80. So again, PE ratio is what the company actually generates in earnings, versus the actual price per share. So if you're the best way for me to put it is like, are you paying a premium? So the higher the P ratio is, the more of a premium you are paying to be invested in that company. So obviously that P ratio has significantly dropped right now. If I'm not mistaken, let me pull it up. Yep, we're at 34 times its earnings. So versus what it was, which was 80. So people at one point were paying 80 times its earnings. Now we get it at half that. And it can continue to drop, obviously, as the stock continues to drop. But again, not terrible. When it comes down to the actual revenue of the company, this is the part that excites me most. So when we look at the actual revenue of the company, we could see that, again, continuous growth, not slightly, continuous growth. It's like exploding. Net income, continuous growth. And then the third part that I really like to pay attention to is, because of this downturn, we have to use common sense. Well, what if things do get worse before they get better? We already know that this CEO is, to a degree, it's ran very well. Jensen is very proactive and he takes his job very seriously. But what if this downturn continues to happen? Can they tolerate the downturn, right? How much do they have? How much cash do they have in their balance sheet? For me, that's important. It doesn't have to be important for you. But that's the third question that I like to ask myself. So cash, as you guys can see on their balance sheet based off of their most recent filing in January of 2025, they have $43.2 billion on their balance sheet or investable assets. So I think that's huge. I think that's very important for a well-run company to have a lot of cash on their balance sheet. Again, just in case anything changes and they need to tolerate it, that they have the cash on hand without the need to borrow, right? They have a lot of cash. They have the growth year over year. They're a growing company in a growing marketplace that, in my opinion, again, like everyone likes to say, it was really annoying when, again, I think I got more annoyed by it because I wasn't invested in Nvidia. Because at some point, again, even though something is growing very quickly, it can often still become overvalued within a short period of time because the growth gets projected into the stock price way before the results are even there, right? So I think that's the part that frustrated me. It's like, man, I'm never going to be able to catch up or get invested in Nvidia because it's growing too quick and the hype is just there following. But we all know that, again, if AI continues to develop in the way that it is valuable and it is getting integrated into our world and our economies. That being said, if we're just scratching the surface, then this is a growing marketplace that is only going to continue to expand, and we are able to invest in a company that is and needed for these chips that help and complement the AI marketplace. And we're able to do it with the number one company in the world. Now, let's share the pros and the cons. This is what I love to do because, again, I like to be my own devil's advocate, meaning that I'm not just selling myself the idea that this thing has to do well. I'm making myself aware of, okay, well, what happens if it doesn't, right? So obviously the bull case is Nvidia's consistent technological leadership in GPU designs and AI acceleration positions. Again, if you don't know this, then you can feel free to take some time to look into this. So obviously, it's leading the marketplace when it comes down to AI advancements, right? And the chip manufacturing. Bear case, increasing competition for established players like AMD and new AI chips. They used to have Intel there. I guess Intel's not even that big of a competition anymore. Nonetheless, yeah, but if you've known anything about AMD versus Nvidia or any of the other chip manufacturers, not really a concern of mine. Wall Street doesn't like AMD just because it's not as well ran of a company. Feel free to look into it. It's not that it's not good. It's just, it's not as profitable when it comes down to like the final numbers. So this one's actually somewhat of a concern. Major tech firms such as Google and Amazon developing their own AI chips, intensifying competition. Something, right? Okay, that's one thing. Nothing crazy, but something to take into consideration. They're going to have to give up more of that market share. Remember, like that's something that we need to be aware of. The thing that I wanted to point out is the regulation challenges and geopolitical tensions, particularly regarding business in China, pose risk for global operations. We have to take that into consideration because that is super relevant. If this continues to happen, this will negatively impact Nvidia. And the other thing that I don't know if it's actually pulled up here is the idea of AI not paying off. We have to entertain that, right? Because we have to poke holes in areas that some people are certain, kind of like DeepSeek. When that whole DeepSeek scandal came out, remember that AI company that's based out of, it's like the ChatGPT of China. When that thing came out, that they were able to do things in a cheaper way than anyone else, it caused our markets to flash crash, if you guys remember, because companies were pouring billions of dollars into Nvidia, into AI. But if DeepSeek is able to do it in a way that's not as expensive without Nvidia because they didn't have the Blackwell chip, but if they're able to do it in a more efficient way, then what's all this money that's being poured into AI and Nvidia? Do you get what I mean? It's like, if these alternatives begin to present themselves, then yes, in consequence, Nvidia becomes less valuable or less in need and less money being poured into and being invested into Nvidia, which will stunt its growth. Something to take into consideration. But supposedly, DeepSeek does use Nvidia's Blackwell chips. They just were restricted in doing so. It was just because they weren't able to get imported to China. But supposedly they were imported to another country that then imported it to China. And it was just a way for China to impact the market. This is what I read into. Not sure if that's completely true. But again, those things, again, are something that we have to take into consideration. And that's the part that excites me most about all of this, is that there is so much uncertainty. But when it comes down to just the numbers, right? And at the current price level, knowing what we know, Nvidia, the way that it's ran, Nvidia, if it's a growing, expanding, or shrinking market, I view it as expanding market. We're barely scratching the surface. It's a well-ran company with an amazing CEO, and I get to buy it at a discount. It's like, my only concern is I need Nvidia to drop. I want Nvidia to drop more so I can just get it at a better deal, right? That's just how stubborn I am sometimes. But the big thing is that I'm invested right now. I'm already invested with about 10%. I want it to drop below 100 to get in with another 15%. I want to be 25% invested at the 100s. If it sells off more, I welcome it. Remember, I'm still positioned well. I'll welcome it. I'll buy more, hopefully around 80 to 90. And I'm doing the same thing for my daughter's account and my lady's account. And this is the thing that I want you guys to know of me, is I'm invested in such a simple way. And my intention is just to be invested, to add more to it. Once markets begin to recover, I'll be in about 50% at the so-called bottom. And then once markets do begin to recover, then I'll add the remaining 50%. If you're part of my LPP team, you know exactly how I work with position size management. I do buy some before confirmation. And then once we do have confirmation on the larger timeframes that overall markets are recovering, things are getting better, maybe tensions are beginning to fall, then I'll begin to invest more money. It's not about time in the market, right? Like Warren Buffett says, or whoever it is that says it. It's about just spending time in the market. Investing is a much different approach than trading, right? My intention is very different. I don't intend to make money right now when it comes down to these investments. I just want to invest in good quality companies over a period of time that I see to be a good deal, that I see signs of growth. My investments are as simple as it gets. I don't like to be invested more than I don't like to be invested in more than 5 different stocks at any given time. The reason why is I like to keep my investment simple. I like QQQ, I like Nvidia, and then I'll sprinkle maybe 1 or 2 in there that I view to be good quality companies that are still growing over the long period of time. And again, at the end of the day, nothing is guaranteed in this market. The biggest focus that I would encourage a beginner that's getting into it is that it is scary because there is so much uncertainty. And what if things do get worse before they get better? When you're dealing with a lot of money, the pressure and the weight does become overwhelming. So let's keep it simple. If you don't have a financial advisor, maybe you can have one and he can invest the majority of your money, right? So reach out to whoever that might be. But when it comes down to you investing for yourself, even if you just do it with 1 share, even if you just do it with $1,000, right? Let's say that you have a net worth of over 100K. You do it with a dollar amount in which yet you can tolerate, just as a proof of concept, to prove to yourself that, yeah, you might not be able to time the market perfectly. No one can. But just by getting in, and if markets do recover, just because it's such a small dollar amount, when markets do recover, that you see the percent return, you're like, wow, this is why I should always invest during downturns. It's not going to make you a millionaire. It's not going to change your life, but it's going to be a concept and a strategy that now you've experienced yourself, that the next time markets sell off, you don't have to be told to invest during downturns. You've experienced it and understood the value behind it. And that is my goal with all of this, is if you don't want to invest in Nvidia, I promise you, I do not care. My intention is to encourage you to invest in whatever company that you see to be a good investment long term, to formulate a plan now, not because markets have to recover and you're going to make a ton of money now, but because markets will eventually recover, and it's better to have a plan of action now than to not have anything in place and then just watch markets recover again and feel like you missed out. Some skin in the game is better than none. Just keep it tasteful and keep it light so you can focus on what's important, and that's learning from the experience. I'm very excited to hear your guys' feedback down in the comment section. I hope that it earns your thumbs up. And also, like I said, if you ever want to watch me trade live, that's more for people that want to do this every day. Second link in the description down below. I trade live every single day, not once a week, not once a month, every day right at market open. It's exclusive to my LPP team, and it literally breaks down to $1.35 a day. If you want to check it out, it's the second link in the description down below, and you can use that discount link that will give you, I think it's $200 off LPP. It breaks down to $1.35 per day. So whenever it is that you are ready, we're excited to have you as a part of the team. Like always, let's make sure that we end the year on a green note. Take care, team.